Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Enjoy the episode and like and subscribe.
Welcome back. So today we are taking a look at why you might be making any money when you trade in crypto. There's a lot of common mistakes, particularly if you're coming around your first cycle or if you have preconceptions of how the cycle should be going and it's not playing out the way you should think it should. So yeah, we're gonna have a look at some key mistakes. We're gonna do 5 here. I'll record another part. So if you do like this kind of content, then please give us a like and subscribe. It's a new channel. We're trying to get it to grow, and there's gonna be a hell of a lot more kind of educational market commentary stuff on this channel. So yeah, let's get to it. So I think, let me just bring this up. If anyone's, I will share this document that we're going through. If you subscribe to the newsletter, I'll send it out in a PDF there. So the newsletter, you can subscribe below this video. So if you want this, then go and subscribe to the newsletter. It's completely free. So why are you not making any money in the crypto bull market? Part 1. Market's definitely getting a bit more choppy, so kind of just bear with me on that one. But misconceptions about the market, right? Price actually precedes the narrative, not the other way around. A narrative does not result in creating like a whole asset to actually run. And that's kind of a little bit backwards. Everyone's like, what's the narrative? What's the narrative? Price drives narrative, not the other way around. And as soon as you can kind of get your head around that, then I think you'll be all the better for it. Because people could be sat in the latest fucking amazing DeFi product. It's going to change the world. They might be in some modular players that are, going to help scale Ethereum finally. Modular blockchains were a thing when Celestia was running 10x, and now that meme coins are running 10x, everyone's writing like these 4,000 word fucking theses on meme coins. Price drives narrative, and that doesn't mean to say that you can't go and like pick assets up in specific sectors, but you have to look at which sectors have been strong consecutively over the course of a cycle. So arguably meme coins and AI, maybe deep in as well. DeFi hasn't moved despite a lot of increasing developments that are like from some really, really good protocols. People will try to kind of retrofit why an asset should be performing in such a way based on the price action. So like if this, let's say example, it's like right the future is modular. Everyone wants to be modular. Everyone should use Celestia for data availability, which is cool. I think it's really, really good. But as soon as the price runs, then everyone kind of retrofits their idea of why it's running, not the other way around. It's kind of like if you've seen Dune 2, where they're all looking for signs that Paul's the Messiah, and then they try and shoehorn in like a situation that kind of matches their belief. And it's just human nature to kind of do that. But go with the price action as opposed to just kind of picking this strange kind of narrative out of thin air, because what will happen is if you don't have the price appreciation to follow, people will automatically assume that that's not kind of a relevant kind of narrative, or the product's not actually relevant. It doesn't necessarily work like that. Some of the best products or projects in the whole space don't have great price action. It's just what it is. And it's kind of, you kind of need one with the other though. So if price does move, you do need like that story to be able to tell yourself and tell others and like market of why it actually is moving and why it's important. Because if you do get some like sudden price appreciation out of nowhere and you've got no story to back it up, it doesn't necessarily make sense and usually retraces. So that's point 1. So point 2 is FDV is a meme. I don't think it is anymore. Last cycle we had a lot of low circulating supply, low float, high FDV coins, which got Alameda in a lot of trouble because they were borrowing against the balance sheet. Basically saying they had like a shit ton of assets on the balance sheet and like a really, really high really, really high valuation, which obviously wasn't true because they couldn't get access to those tokens because they were locked for the fucking next 30 years or some shit. So what is tending to happen is we've kind of seen a repeat of that, which is not great. So low circulating supply, high FTV. If you do have long-term positions and it is a new asset, then I'd think very, very long and hard about why you want to hold that, particularly through a lot of the inflationary pressures that might come onto it, whether that be unlocks, whether that be emissions, whether that be whatever the fuck. So you have to kind of start looking at FTV comparisons, particularly at this point of wherever we are in the cycle. I'm not going to pretend I know that. If I was to guess, it'd be like a third to a half in, so somewhere around that region. And so yeah, a lot of people are sick and tired of these like high emission games that only benefit those that are they've got access to prior rounds and stuff like that. And I think that could be one of the factors why the meme coins are having such a like day in the sun, because people are sick of not being able to get relatively fair access to these projects. And we all know how that kind of plays out in the end. So projects will launch with like a really low like circulating supply and allowing price to run on the pretense that the FTV meme, like the FTV is a meme. And like everyone will be like, oh yeah, well I bought it because like the first unlock is like 12 months away or some shit. And then what that allows it to happen is, based on the current circulating supply, it's allowed to run up probably a lot higher than it should. So then when it does come time for these unlocks to happen, you've kind of got that huge buffer between where price should be based on FTV and then where price actually is. And those that are unknowingly buying into positions that do have these large inflationary pressures, which I'd argue is the lion's share of people, they're, unbeknownst to them, they're getting absolutely screwed every which way. So be very, very careful. Use token unlocks. Great team. They show everything, but to be honest, like holding for any longer, like from cycle to cycle or intra-cycle, I just wouldn't be touching anything that's not Bitcoin and ETH and maybe even Sol, because Sol's got some inflationary pressures which they're trying to dampen. So apart from those three, there's a lot of like shenanigans that can go on to make it like a terrible, terrible hold long term. And there are games that people play, like if they got like really favorable entry on rounds, like maybe pre-seed, seed, series A. So large like positions that are still vested, people can sell them OTC. They usually take a large discount if they do that. So like sell locked tokens to someone who wants to buy them in size, but buy them at a discount. I don't like this trend of like networks being able to have vested tokens staked, earning like inflationary rewards, and obviously because they've got large positions, they're taking like the lion's share of that, which isn't great in my opinion. And then what I think you'll probably see less of this time around, people just shorting the perp of whatever token they've got vested, because a lot of funding has been a bit skewed and stuff like that. And I think a lot of people got blown out just trying to just be delta neutral going into whatever unlocks they had. So let's say they had like a $2 million position completely locked. Go and see if they can kind of hedge that. So they're happy to lock in that gain by putting the short on. Stop chasing airdrops and points programs. You are not a farmer, despite what some people might tell you. You are being farmed, and this is becoming more and more obvious day by day. These kind of shifts in rewards or incentives or customer acquisition channels and customer acquisition costs, they're the same shit, just like same pig, different lipstick, like every single cycle. This is just liquidity mining, where the team get to decide how many tokens they give you at the end. And what teams will do, like for better or for worse, I don't really give a shit what they do, but the engagement metrics that they'll get from like Galaxy campaigns and all this kind of stuff, plus the growth metrics that you'll see actually on chain from people participating with their protocol, they'll use that to kind of go and raise another round. I don't necessarily care about that kind of shit, but when they do that and then kind of farm the users, raise at a much higher valuation because they've got this ongoing points program and this ongoing kind of Galaxy campaign or whatever the fuck, and then give like a sliver away from the participation, then that doesn't really sit well with me, because liquidity mining, you knew what you were going to get. That was transparent. It wasn't great for the protocol. This seems like a shift completely the opposite way, where the team will actually just be really opaque with how many tokens you're actually getting, what the kind of hurdles and hoops you have to jump through to get these kind of points are. and you just kind of get tied up. You've seen it, like a lot of people pissed off with Eigen Layer. You've seen a lot of people pissed off with like margin fi and stuff like that. And you're just tied up in a core position when there's a lot of opportunity in the markets. And I think the opportunity cost is way too high. And yeah, you might earn some kind of yield by whatever point you get, if you kind of think about it that way. But like personally for me, I think it's absolutely stupid, and the kind of meta is a little bit dead now. In all honesty, another reason why people can often be like flip flopping between positions is sometimes a lot of people don't have a clue what they're holding, and you can't just buy something based on someone else's tweets or someone else's understanding or someone else's research. You need to put the hard yards in and actually understand what the hell you are holding, because at the first sign of weakness, you're just going to be shitting yourself and you're selling the position. You're probably selling the lows. It's going to rocket higher, and then you're just going to get chopped up to bits, and you're just going to be kind of giving money back to the market, and market makers will be happily taking that from you. So you need to understand the position, the asset. You'll happily see it through like volatile times and reap rewards if the thesis actually comes true, and then you have to understand what you're buying, and more importantly, why you're buying it, and where is the kind of deviation where you might actually be wrong, so you can kind of cut it and get out. I see that a lot. The last one is being too technical and using TA, like overly using TA. I call it horoscope for virgins. I definitely use it. Like, don't get me wrong. It's great for like kind of key levels and stuff like that on a larger time frame. Particularly if you start getting down to the lower market caps and meme coin space, I don't necessarily see the point of it whatsoever. If someone's holding 2% in the supply and they're just gonna absolutely fucking nuke it, your TA is not going to save you. You can't draw thicker lines. It's not going to help. And what it can do, it can talk you out of like really good key positions where you probably would have held for a little bit longer. But like a 15-minute chart might look a little bit bearish, and all these kind of patterns that you've been taught over a long period of time, you kind of pattern matching and kind of try to transpose what you actually think is going to happen. The same chart can look completely different to two people, and like different time frames thrown into that. That's like a really dynamic mix. So just be very careful with that kind of stuff. You might get like a generational entry and cock yourself out with something because it looks pretty shitty on a low time frame. And I think a lot of people would be too TA heavy when particularly the lower market cap arena is purely just price driven, and then people retrofit kind of narrative and fundamentals off the back of it. So that's a couple of points. I haven't got some notes for these, but you're following the wrong people is another point. Like, YouTube is a cesspit. It will show you absolutely fucking idiots all over the place. Nobody has a clue what they're talking about, including me. The very, very few accounts that I'd actually kind of hang my hat on and kind of recommend. So you have to be very careful who you're following. If you don't know who to follow, jump in Discord. Our Discord, there's a lot of good people in there that are happy to help. And just if you are kind of unsure about specific accounts, you can just DM any of us and we'll kind of give you our opinions on them. Position sizing, over diversification, or you're too heavy in a specific position. Emotions just will take over and you'll end up capitulating, or you will not be making gains because your losers will be offsetting your winners. And then trying to be too smart. A lot of people can be trying to be too smart, and you certainly don't want to be the warjack in the mid curve. All well and good, but this comes back to point one: price drives narrative, and not the other way around. So you might be like ultra genius, but if you're not making any money, like, what you're really doing. So I'll expand on a couple of these points. I'll leave the PDF in the newsletter for anyone who wants it. And please give us a like and subscribe, and we will see you next time. All right, thanks for listening. If you enjoyed the show, please give us a like, subscribe, and turn the notification bell on for next time. See ya.